And good afternoon, good evening for those that are watching and listening live and those that are listening and recording. Please contact us if you have any further questions as we get through the uh, session for you today. What we're going to be talking about is a recurring theme that we have is there's different ways of initiating and dealing with the world around us when it comes to trading and investing. And we're hopefully going to give you a way that maybe gives some more clarity to where you might want to go. First off, a little disclosure information here. Um, Nothing that I say here is a guarantee of success. You are solely responsible for your trading and investing. We will neither solicit nor rely on any investment advice from Pinnacle or any employee of the Pinnacle Institute. Federal Trade Commission tells us that all research data suggests that most day traders are not profitable, and any analysis given here gives no guarantee in the stock market. We all understand that all trading comes with risk, and there's no guarantee of success in the stock market. Our copyright is the entire content of the workshop, including all audiovisual presentations, what I say, contents of all materials are the property of the Pinnacle Institute. No portion should be showing up on any other social media or any other platform or media. Subject for today is trading the news the wise way. Whenever one has a challenge, you must start with defining the problem. In this case, the problem is you. That is not necessarily to say that you are really bad at what you do or anything like that, but seriously, it all is about you because when it comes to any inputs and you executing those, that's all your responsibility. But we'll get more into that a little bit later in the session. So let's define the problem. What is the news? Is there real news? Well, sure, we've got, and we'll get into the list a little bit later, but we've got earnings reports, we've got events that happen out in the world. We've got different events that happen in a news cycle where the Fed will report something, or we'll have, like today we had inflation and what we call NFP or non-farm payroll was reported. So those things are real news. They do provide information. Also, in the other sense, there is things that are brought to us as news that have a little bit different slant to them, and we'll talk about that in a moment here. So yeah, there's real news. Is there fake news when it comes to investing? Well, certainly. Going counterclockwise here, um, you'll hear stories of people making a fortune in the stock market with a specific trading or investing technique, represented by the woman having the dollars fall on her there. Or maybe those are Benjamins or a collection. But anyway, you'll hear stories of this, and where it will be intended to not brag, but give them a sense of excitement to get the people involved in whatever presentation they have. There's also Bloomberg and all those financial websites, and those are news, but they're also fake news. In a way, people don't realize it, and this is one of the big breakthroughs that I had early on in my education. Is I found that by looking at the financial world with a little bit of a jaded eye and realizing that anybody that's spending money to present you something is always trying to get something out of it, and it's not malicious or anything, and it can result in malicious impacts. However, they're trying to run their business or get your as a customer or get other people as a customer, so they will say and do things that are right on the edge, to get that reaction. Okay. And one of those things is similar to the woman with the money falling on her. That's an enticement to get you to be involved with them. Also, they will throw out and have a lot of degrees and doctorates and experience and all that, and they'll all have awards for each other, which justify their importance to you. Hopefully, that's what they're looking for. But just be aware of those things might all be fake, and they're really deceptive in that they're trying to get you to buy or sell something, and they're going to take advantage of that on the other end. Kramer, is he fake news? No, he says what he says, and what we have to do is evaluate: is that really what we want to hear, or is it something that we can use or not? Very entertaining, no doubt. A lot of information on those types of shows. I don't want to beat up on Kramer, but there's a lot of them out there, right? But he's the most visual one to all of us. And they will have people on that have tremendous experience and all that. But again, they might be presenting something. And I don't know if you realize in the last 10 years or something, people have to disclose what stocks they're in before they talk about them now. It didn't used to be the case, but at least now they at least have to talk about what they own before they can talk about that stock or stocks around that stock or its competitor, et cetera. I don't know how tightly that rule is enforced. I haven't heard anybody going to jail or anything, but they did present that in order to kind of keep those people at bay a little bit. Also, we're going to talk about the two gentlemen down lower left in a little bit here. You've got the guy across the fence, your neighbors. They're not only information in themselves, but they're getting it from other sources and just kind of channeling it through them to get it to you. So is that fake news? No, not really, but it can be a representation where you can have a lot of respect for someone, but what came into them and where they got their information may not be the greatest, right? But generally, it's risky to even take advice or execute on advice from your neighbor or from a acquaintance because it gets you in a bad relationship potentially. But is there real fake news? We alluded to it a little bit earlier, but yeah, there are government agencies, government presence, lots of presence in the financial world because government and the financial world are very tightly put together, and they will try to force people or manipulate people in certain directions. So be aware of that they are what they are, and for good or bad, they do what they do. But you have to look at it as it's trying to manipulate public or sentiment or things like that. Okay, let's talk about the levels of news that do exist to get to some of the details here. We have the planned financial reports on a schedule. We just are in the middle of the earnings season right now. We're just kind of coming to the end of it here. So there's those planned reports. There's also many reports that you can find on different websites. And I personally go to forexfactory.com to find out what news is coming up for that following day or week. And they have inflation reports, they have uh, uh, employment reports, they have money reports. There's many different reports based on different countries that come out, and those are real news. Of course, they come when they are planned to, and it's something you can kind of plan for. Also, we have elections and speeches and other political news that is out there. It could be someone falling down the stairs to a war starting or escalating, things like that. There can be many things that uh, are news events that were planned or not planned, but they do have an impact on the markets. Of course, a big one is the Fed and the FOMC meetings. This is one that's on a regular basis. You know it's coming, but it does provide many people with kind of an anchor for where they're going to really watch for news. There's also the employment reports I mentioned earlier. There's oil inventories come out every Wednesday. There's oil inventories that come out, at least U.S., to see where those levels are and the potential to move that market. There's also gas inventory, which is the following day, or Thursday, and same idea is the volumes or the amount on hand will come out, and those can move the markets one way or another. Overnight sentiment. So every day the New York Stock Exchange closes at 4 p.m. Eastern time. So there's a period of time between 4 p.m. Eastern time and 8:30 Eastern time where the U.S. markets are not running, are not open, if you will, except for some overnight trading that exists now. However, all through that night, there are individuals and groups that gather information, or you could gather the information, And then there becomes this overnight sentiment statements that are happening in the morning. They'll just talk about, oh, the Dow is up this, the NQ's up this, or the Nasdaq's up this. They'll talk about oil being up, gold being up or down, whatever. But there'll be some sentiment that comes through that because humans are communicating it. So they'll put stuff out that kind of talks about um, those general words that you get a lot. But that can be news to people. People can hear those things and get bullish or bearish on their market of choice just based on that overnight sentiment. And of course, we just talked about there's the earnings season, which is real, you know, legal information that the companies put out on a quarterly basis for the most part. They don't all do it on the same day though. So there's like a 6 week period where different companies report. Excuse me. There's also more news. There's these shiny objects, I like to call it. Anybody remember GameStop or Bitcoin or some of the meme stocks that have occurred over the last several years where they all of a sudden, it seems like that overnight sentiment, we were talking about that, all of a sudden, all the financial institutions, all the websites, everybody starts talking about this this particular company or this particular company because, well, for the most part, they're bored with the markets as they would be because they watch them every day and every moment and every second of the day, of the week, of the month, of the year. So when these kind of one-offs come out, they all jump on them and it becomes something that grabs everybody's attention. I'm sure you've seen it. As this happens, of course, that sucks everybody else in. Oh, well, since it's all out there, I got to do something with that. I got to look at that. And you'd be surprised at how many people get into something or get out of something because of these shiny objects that get put in front of them. There's also the buzz. The one I like to use is they'll talk about um, oh, what the, I'll get it in a second. The inverse yield curve, right? The inverse yield curve on bonds will put them into a tizzy in the financial networks because it's just one of those things that no one challenges, which is an indicator that if you can actually think about this, it's within 14 months there will be a recession if there's an inverted yield curve. Now, how much does that affect today? Should affect it in no way whatsoever, right? Um, but it does try to manipulate that sentiment. But they all like talking about it, even though they really can't trade or invest based on that particular news. And of course, there's other specific stocks. A stock has a new product. A stock is losing to its competitors, uh, combining companies, breaking up companies. All that kind of stuff happens constantly within the news cycle. You'll also hear many reasons that there's going to be a correction. This is one of the ones that is almost evil when they do this. When the financial institutions kind of get together, they find some experts, or something, they will always publish the fact that this guy is predicting that there's going to be a correction because of X or Y. Now, why did they do that? Well, get the hits, whatever they do it for, it's generally not right. And they are trying to put fear in the environment because they also sell products that make money to the downside. So they're trying to push the negative so people stay in the market and try to invest the way they want them to invest. Also, whatever Buffett says, people will react to that. Whatever Elon Musk says, people will react to that. Whatever Jamie Dimon says, people will react to that, and on and on and on. Many different air quotes experts or impactful people will be whatever they say bounces around the financial networks and eventually reaches everyone. And also governments, they do the same thing where they're talking about spending this, spending that, investing in this, investing in that, and those are news events that do make people believe that they can get an edge by taking advantage of those things. And of course, the guy across the fence can do all of these things for you by just having a discussion over coffee. So, generally, what is news? Generally, what is news? It is something that can move your market of interest or many markets of interest or your focus due to someone else's behavior. So, because it can move the markets potentially, it can move your focus. So if a piece of news comes out, I talked about that meme stuff or the overnight sentiment stuff. Because of that stuff that is out there in the ether, it can actually take your focus away from what you're trying to do and get you on that fun train that like I was saying earlier, financial institutions like to get on that. They get bored with what they're doing, and they like to jump on something that's new and getting interest and getting hits on their websites and all that kind of stuff. But from our perspective, from a individual trader and investor perspective, most news events, whether they're fake, real, whatever it is, they move our focus off of what we're trying to do to often to something else. Okay, that is what news events are due to an investor trader. So when we have this influence, there's certain reactions that we might have. So we're getting all these bombarded with all this information. Many traders investing can get anxious about it because, of course, as most news is, if it bleeds, it leads, right? So when you hear news, there's a very high possibility it's going to be something negative, right? So that increases anxiety, especially for new investor traders, because they can be very anxious. I deal with many people that is their number one issue is I can't act because this or this is going to happen. They're very susceptible to all that negative information that comes in. And a little bit later, we're going to talk about how that's actually a wonderful thing for a trader and investor. Also, when people see news and maybe earnings came out for something like last night, or earnings came out for Amazon and the stock went up 11% today, there's a lot of people that regret that they didn't have that. And of course, what that does is get them a little bit more have a little bit more anxiety or anticipation of getting that for themselves sometime, right? So that regret can put a negative spin on the emotion control of that person for the next time, and that in turn can cause that aggression where if I hear a piece of news, I've got to get into that because it's going to go up, or I've got to get out of that because it's going to do such and such. Oftentimes, people will do that, and it's absolutely the wrong thing to do, whether it be buy or sell. News can drive someone to do something, thinking they're taking control or taking everything by their reins, and it actually most often is absolutely the wrong thing to do. Um, I forgot what I was going to say about that, so I'll just move on. But again, poor actions can happen. You could get out, get in, be stay on the sidelines. All these things can happen because of the anxiety and the pressure of what all of this news is giving you. Because there are literally 50,000 points of news every day that you could find. Everybody has a different source of news that they look at. Everybody has. Some people have one or two sources. Some people have 50 sources that they're filtering from every day. In all cases, though, they're not going to get it all, and in most cases, they're going to get too much. And so they'll end up having poor actions again. Poor actions are tentativeness, um, incorrect focus, or too much focus on something, et cetera, et cetera, et cetera. Of course, other people that um, like the gambling aspect of trading, they will have these predicting tendencies that they'll use the news to say, "Oh, I see a little glimmer that something good's going to come in here, so I'll get into this product, or I'll get into the indexes, or I'll get out of the indexes." So they'll get into this situation where they're predicting things and acting on that with today's information, and of course, that's not going to be the same tomorrow, the next day, the next day. Every day is going to be a new set of variables that are going to feed into that. And most often, people that are successful at that end up giving all their giving it all back because they think they can maintain that because they're so smart or they know so much more than other people when it comes to predicting things. And of course, we know compared to the general entire public, no one knows more than they know. Also, we have people will, like I was saying, personalize. They will look at their own specific news feeds, which is a good thing, and they will have their own um, ownership of what's going on out there. Now, as we do this, we tend to eliminate stuff that may be valuable to us and only stay in stuff that may not be valuable to us. So personalization of things can be very, very restrictive on your success and your flexibility, and in many cases, your the amount of action you will get. And of course, one of the most damaging things in the human spirit is anger. So I just saw a big article yesterday, day before. I can't remember what it was. Can't remember the source either. But it was about people that just generally thought the whole market was rigged against them, and they were walking away, and they were going to get in bonds and never look at the market again. And those people might have been very rational in their actions, but the information that they were getting might have been real, but they didn't have something to deal with that situation. So if the market is being manipulated, it doesn't necessarily mean you can't take advantage of the market, because the prices are still moving. And we'll talk a little bit more later about why how we can reduce that anger by having a technique that isn't really wrapped up in all the information that we're getting from our news feeds and from our other information feeds. But most people that really want to tie news to action feel very helpless because they don't see consistency. Um, for those that have followed specific stocks, they will see um, a tremendous beat on the stock price, right? Where wow, they expected this earnings per share, and this came in, and the stock popped up for a day, and then just died the next day, right? Let's say it went up $2, and then the next day it went down five. Like, what's going on there? How come what I'm seeing in the news isn't matching the behaviors? Well, there's always something in an earnings report or anything like that, um, that adds to the flavor of the raw number that comes out, right? And that would be, forward-looking statements on products and challenges and supply chain issues and all that don't come out in the raw number, but come out, after the fact, after people really look at what's going on with the company. And it's not necessarily going to move down or up based on that information, but oftentimes it goes very counter to what the initial impression was on the news. Okay. And that's a tough one for a lot of people, but it's a good learning, and it does kind of put you into situations like, what's moving the market here, which is the theme of the end of our session today. What's really moving the market here? If it's not this news doing things that it should be doing, there's something else going on, right? All right. So with all that information that we have in, and being real and fake news, or not helpful news, if you will, um, do we try to figure out what's real or fake? We've got those 50,000 points of information coming in. Do we try to figure out what's real or fake? And the answer is absolutely not. Absolutely not. The facts are, the news is what it is. You can't do anything about that. You're not going to be able to congeal all the information you're getting better than any of the people that do it, you know, 24 hours a day, as in big teams of people that do it. You're not going to be able to separate the wheat from the chaff, as they say. But what we can do is we can plan. We can plan to deal with the news in a wise way. Now, how do we do that? The people that prepare for the news, I'm sorry, the preparation people generally have for expected news events. Okay, it's just so I read it. You ever read something and it kind of doesn't make sense? The preparation people generally have for expected news events. Okay, many traders, many people work exactly like this. They get in a position to not miss the opportunity. This is what people generally do. They know what's happening, but they don't want to miss that opportunity. They also can straddle positions and options, hoping that it pays either way that it moves. Basically, it's saying, I don't care where the news moves things. I'm going to make money when it moves one way or the other. They also can be biased in one way and put some options positions together, or buy the stock outright, leaning in one way or the other, meaning I want it to go one way, and I think it's going to go one way, and I'm going to be there for in case this news does move it that one way. Other people will take some neutral options positions, and we're not going to talk about the details of that. But basically, if the stock doesn't move on the news, they'll make money. Okay, that's the idea behind that one. Many people, and this is really the sad part about this, is many will buy or sell prior to the news event, a planned news event, of course. They'll buy or sell, and this is really gut feel, right? This is what's going to happen. I'm going to get in something because I think this is what's going to happen. Okay, absolute the worst reason or rationale for getting in or out of a trade that there is, and we'll talk about that extensively later here. Other people, when they have news events coming in, they'll get impressed. So they'll go on the bench, right? They'll sit back and they'll wait for the news event. Okay, not a bad idea in many cases, but it's really not preparing, is it? It's not. It's not preparing. It's sitting back and watching and getting out of the way of whatever news event might be coming. Uh, and on this one, a earnings season is really good for that. Well, people will not do things near an earnings season just because of the possibility of it going either way, right? These news events, however, the people that are preparing generally have enthusiasm. Okay. They generally have enthusiasm because why would that be? Because the market's going to move. So they have enthusiasm that the market's going to move. And that can get them into trouble and it can get them into good situations as well. They also have inconsistent actions. For instance, when Apple's earning came recently, people could have been planning for Apple. But when all the other 7,000 companies' earnings were coming, they did nothing. They were just looking at um, those stocks just a little differently, not with any concern, not with something that they were interested in. Okay, not a very consistent thing because you're looking at one market, Apple, differently than you all are all the others, or Amazon, whatever it is. But they're literally not even involving those other markets for whatever reason, right? Maybe they trust this, they've had some experience with that, but they don't have any consistent actions on a band of many markets at once. Let's talk a little bit about what happens when news events due to price. They move price to where it was headed anyway. This is not really a meme. This is kind of one of those adages, and this is true. A news event, all the information that you see on the internet, the 50,000 points that might apply to the companies that you're watching, all of the things around that, all the people that were affected by that particular company or any news has already been applied to the price. So the news event quite literally moves the price to where it was going to end up anyway. I hope that makes sense. But all of the aspects that move that price have been in the environment coming up to that news event. The institutions that usually get a little heads up on the information, they've applied what they're going to do relative to the price of that object, of that security. The people that are really the fans of that particular market or whatever have likely already done what they were going to do for the most part. So the news event comes and it pushes price, let's say, up $3. Well, the conditions were already set for that to occur, and we'll talk about that a little bit later as well. Another thing that happens is often, and this is extremely often, and it happened last night, price will retrace back to where the news event occurred. Now, this could happen very quickly, or this could happen within the next 24 hours. So, very often, if you see a gap in price of a market, it will come back and test that gap. Okay. And in the orange here, whatever that color is, the market makers, the Goldman Sachs's, the BlackRocks, and all that, they don't irrationally a- act on a news event. Remember, they probably know a little bit more than you do, and they don't just jump in or jump out of things willy nilly. they um, are not involved in that news event at the moment. They're waiting for that thing to come to their price, whether it be a sale price or a buy price. They're sitting back and waiting for that to work for them. Okay. Very important thing that the people that make all their money on the markets do not participate in that news event as others do. Other thing that can happen when these news events happen is it can do nothing at all. We see that more often than we don't see that. So there can be a big buildup to a news event, and whether it be earnings or whatever, and pretty much the price of the market or many markets don't move at all, and that's absolutely fine. That does mean that there's equilibrium between what people thought was going to happen, what people did happen, and oftentimes that is because they have insider information and they didn't push it irrationally one way or the other because that just wasn't in the cards for them. Hold on one second. Here we go. But the key one is here. They moved the price to where it was headed anyway. So what does that tell you? That tells you there's a way to do this without even knowing that there's a news event going up. They moved the price to where it's heading anyway, and we'll talk about that in just a moment. What should be done in preparation for news events? What should be done? Well, have an awareness that events occurs. That's always good. Planned events, always good. Also, have an awareness that there could be unplanned events occur. So you can be ready for unplanned, believe it or not, and and also be ready for the event itself. Okay. Plan to catch the move. Catch the move. Don't jump into it. Don't guess it's going to happen, but catch the move. So if the price and generally what happens in markets is they don't go from point A to B and just continue past B until infinity, right? They're always coming back. They're always up and down in their movement in whatever general momentum direction they're in. They're always moving up and moving down to get to their eventual uh, location, which in any time frame it could be different, of course. But trying to catch the move and not jump into it puts you in a much better situation than trying to jump into it and hope it doesn't hurt you, right? But it's always stay on the sidelines. If it didn't come to your price, if it didn't do what you were supposed to do, you're in no risk if you just stayed on the sidelines and watch that news happen because it just doesn't fit your trade plan. Let the everyone else react to it and then learn how that price has been moving. But then what we believe is the best thing to do, define your action and wait for price to come to you. Now, the key thing here is this whole presentation is talking a lot about the news, right? That statement doesn't talk about the news. That statement talks about price action. In price action, as we talked about in the previous slide, the price is going to go to where it's going to go. News just helps it get there sometimes. And if you've got a place where you want to buy or sell something, it's going to go find that if you know how to work with the charts and put those trades and investments on. So does it make sense to be fearful in all of this? All the news coming in, all the distractions, the fact that there's really not a whole lot of concrete things that you can act on relative to the news. Well, again, anyone without a plan should be very fearful in any financial environment. If you don't have a plan and you are just listening to the news saying, I'm going to get into this, this is going up, oh, I'm getting out of this is going down. If that's the methodology that you have, you should be fearful because that's not sustainable. You need a financial plan and a trade or investment plan that you can do consistently to be successful. And remember, all that news that's coming at you isn't necessarily the truth, isn't necessarily real, and definitely isn't there to benefit you. It's for you to play their game. to buy and sell when they want you to. And believe me, when the institutions are kind of influencing you to buy, you should probably be selling. And we're trying to influence you to sell, you should probably be buying. Okay. So you don't want to play their game. You want to play yours. Now, this statement right here, um, this was a paradigm shift as I discovered this and I expressed it to others. This is a big thing because we all like to trust our financial advisors and we like to trust basically people that have smiley faces and look real good on TV. But truly, they are playing a different game than you are. They're only trying to buy low and sell high or get out when the prices they consider to be too high. They're doing nothing else but that. They're not saying, "Oh, I love this company and I want to get this company because I just love this company," or "This company is lousy because it does, because it has blacktop parking lots." They don't get into all that. They get into where is the price and what am I willing to buy and sell that price at. But in order to do that and do that more successfully and get more transactions, they need to push the public to being on the other side of that trade. All right. There's nothing fancy or evil about this. It's just the nature of business. They need customers to buy and sell so they can buy and sell. But we want to buy and sell along with them, not like all the other, what we call retail traders out there. So we need easy to understand and execute methods for planning and unplanned news events. Most importantly, the unplanned ones, because those are actually more um, frequent than the planned ones, right? But we want to do this to give you the real edge in investing and trading, not them. We want to stay centered in what we're doing. We don't want to be this guy where we're just taking it all in, getting stressed, getting tentative, unsure, and all that. We don't want to be that guy that just can't act or acts irrationally or in revenge trading, all that kind of stuff. We don't want to be in this world. We want to be a more calm world. And just a few questions to kind of close up the discussion of the news part is is there news that just doesn't matter? Yeah, most of it. And in some cases, all of it. There's a lot of news that just doesn't matter because you don't have an advantage to that news. Everyone else has that piece of news. How do you have an advantage or an edge? Not you don't. Right? Is there a whole lot of news that is just someone flapping their gums and wanting to get noticed? Absolutely, that's huge, especially in the financial markets. That is absolutely huge, where somebody will put together an indicator or talk about the relationship between this and all that. It's like they overthink it and they get into a a circular way of thinking, but it's only to impress you and to get you to be a customer or laud them in some way or others, right? And oftentimes you'll find in big organizations, they're really just talking to their peers. They're trying to impress their peers. They're not really trying to communicate to you, the customer. They're really just talking to their peers. So there's a lot of stuff you hear. It just doesn't matter. So what news does matter? Well, earnings matter. But if I could, when we talk about what does matter, from a trading and investing perspective, what really matters is the news that moves the markets you're interested in, right? That's really what matters. If you think about all the other stuff, if I'm watching a market, let's say it's an index, I'm looking at the Qs, the NQ top 100 stocks, the Nasdaq. If I'm looking at the Nasdaq, do I care about what's going on um, in a company in India? Probably not, right? That doesn't matter. So the news that matters to you should be the news that is highly percentage of chance of impact to what you're watching or what you care about, right? But how do you define what news is going to move the market and what news isn't going to move the market? That comes with some experience, not a tremendous amount of experience, but it does get to the point where the most important thing is to start filtering out the news that doesn't matter. the noise. And most of this is absolutely just noise. Okay. Now these guys here, they can do some damage, right? Between the Fed and the United States government, they can do they can do damage and positive. Let's just say it that way, just to be fair. Um, but the rest of them, they're just mostly noise. They're not something that you can take and actually apply to a strategy. So let's move to the next thing, and just a little discussion about sentiment. Most of that, when I talked about the overnight, and I talked about how the financial networks and all that, sentiment is actually congealed news that's been gathered and over um, generally consensus is reached. And all of a sudden, you will see people all talking in the same kind of language or with the same emotions or the same mood. And you also often see this when we talked about the, things that are going to cause a market correction. You'll see this all of a sudden. Everyone will talk with, oh, the consensus sentiment is that the market's going to drop 13 or 14% before year's end, stuff like that, right? When you hear that kind of stuff, to many people, that affects the way they behave. They become more tentative, they become negative, they get out of the market and all that. But truly, it's just an appeal to the human emotion to need a sentiment to what you're doing. And I don't know if I'm saying it that well, but it's just another one of those things that they use to try to manipulate you into some type of thinking, whether it be, oh, we want everybody to use their financial advisor to do what they're doing, or whatever. It deters traders, that's for sure. When you hear the sentiment get negative, traders tend to behave with that sentiment. Okay. But truly, when it comes to a pure trader, the sentiment means absolutely nothing. It should mean absolutely nothing. It's not easy to ignore that, but it should mean absolutely nothing. So we're going to do transition now. So we talked about the news a little bit about what you should not do, and all that. But at the Pinnacle Institute, we teach trading and all that kind of stuff, and there's certain aspects of what we do that in our classes and things. And one of those big aspects is we try to put in very clear terms what you should be doing, what you should be doing to be successful, what's proven to be successful. In our world, this is a nice quick little summary of that in about 5 minutes. So why do investors, traders historically exceed their goals? Number one, and there's a reason it's number one, they manage their risk. If I'm just guessing prior to a news event that this stock is going to go up or down and I'm getting into the stock or get or sell or shorting the stock, am I managing my risk very well? No, because where am I doing that? Well, I'm just doing it now because I had the idea now. That's not managing risk, because where's your stops on that? Where's your target on that? They're not managing a trade. They're doing something else, right? They're speculating. Speculating is the only way to really lose all your money in the stock market, is speculating. But managing your risk is how you stay in the game and actually can be much more profitable because you don't accept the big downside, which is inevitable to people that just buy and hold forever. So they manage the risk. They also don't waste time. When opportunity is knocking, they act. And we're not going to talk about it now, but with options, there's a way to act and make money waiting for your prices. Okay. We talk about that extensively at the Pinnacle Institute, but we're not going to do it in this session. But they don't waste time. They're ready. Remember, we talked about preparation for news events? They're prepared. So when the news event happens, they're not jumping all over the place looking for, oh, what should I do? What should I do? They're just saying, oh, I'm going to I'm going to execute that particular strategy for this, and they don't miss the trade because of it or the investment. And like I just alluded to, they act when the opportunity knocks. They act when the opportunity knocks. Important in parentheses, without forcing it. So when the price comes to where you want it to be, they act. It's not, I've got to get in this because there's a news event coming up or the news event happened. Very classically, this morning, if you look at the ES and the NQ futures, at a piece of news early in the morning, the price of the general market went up very quickly. Okay. And then just as fast as it went up, it went down very quickly. And then it went up very quickly. So all those people that were guessing, and if they had stops in, they all got stopped out, and they didn't make any money this morning. But if they had waited for the opportunity to knock for them, not the news event to knock, but an opportunity to knock, they could have made money on the short, they could have made money on the long, and they could still be in that trade. But because of acting and forcing it, they they got chewed up, as they say in the market, right? They got thrashed around. Very often happens, and we talked earlier about 95% of the day traders fail. That's exactly why they fail, because they try to guess where things are going, and a future going a good distance from a price perspective can be very expensive if it's going against you. And by jumping into something, they probably haven't put their stops in a reasonable location to where when it does go against them, they don't get out efficiently, if you will. They lose too much when that happens. So in all of this, they ask when an opportunity knocks, and they follow a consistent process supporting all three of these. That's supposed to have a four on it. I don't know why it didn't. They follow a consistent process to manage their risk, to be ready, and have their money efficient. Don't waste any time with your money, and they are able to act when that opportunity knocks. How can I determine best when to get out into and out of a position? Well, the Pinnacle Method with supply and demand can provide that confidence and skill to trade and invest in any market under any conditions. And we do mean any market. What we do here is using supply and demand, we identify where the most likely probable buys and sells are, or targets, right? We're either buying or selling, or we're buying for with a target, or we're selling with a target under any market conditions. And that includes all the news that we're talking about. It was developed using a single approach and strategy for all trading, investing, and financial institutions, and it's been employed for well over 20 years now, um, with great success for many, and hopefully great success for you if you decide to go about it. When it comes to simplification of what you're looking at and what you're trying to do in your investment and trading world, it really congeals what's important to not 30,000 things, but maybe 10 to 20 things max that you're really concerned about every day in your investment and trading world. It works for investment, sorry, for income, for growth, for wealth. Protecting your strategies are all ways that the supply and demand strategy can be used. So, but as you proceed through our courses, keep in mind that the decisions you make for engaging your financial future is directly guided by supply and demand. It is not guided by all the news, all the things around you that might make you anxious, excited, depressed, frustrated. Okay. It doesn't focus on things that would do that. It focuses on pure supply and demand in everything that we do. And I do mean it for all the different, for for currencies, for stocks, for bonds, for options, for Bitcoin. Everything can use supply and demand to trade. So, as I summarized earlier, it allows the ability to make decisions on any security with the same methodology. These charts work across the board and don't need to be tuned to a specific type of security either. It gets us independent from news sources and other inconsistent decision drivers. And the important word there is decision drivers, because that's the personal part of it, right? Most of the things that we try to do just to fit us become too personal and too emotional and all that. We spend a lot of time managing emotions at the Pinnacle Institute, and by managing it, I don't mean taking away your emotions, but being aware of them and how they can make you do things that really aren't in your best interest. Again, works for all of those, and also commodities and all that as well. Enables a consistent process, like I said, lack of which is the downfall of most traders and investors. I would have to say all traders and investors lack from a consistent process. I'm sorry, most traders that fail, most investors that fail, and failing on investing is a relative thing, right? But not being most effective is due to not having a consistent process or staying with your plan, coming up with a plan, staying with it, and not being emotional and going do something else on a whim, right? One of the real anchors that we have at the Pinnacle Methods is, remember we talked about that overnight sentiment and all that. Well, we've got a crew of folks that go kind of bring that all together, not from a, oh, what's the interesting news that happened overnight, but where has price moved to where it's getting close to where it's time to act. Okay, in this 45-minute summary of the market, and opportunities are presented every day. The session includes both the long-term and mid-term sentiments and levels according to the Pinnacle methodology, as well as the odds enhancers uh, specific to the Pinnacle methodology, which are proprietary. And every day is done the same. Every day we will look at the same markets to give an overall view of specific stocks, for example, or the more specific or less specific index funds and things like that. Stocks, bonds, and all that, we cover that in that 45 minutes. It also provides insights into opportunities and general market conditions. So, for instance, like what happened overnight and weekend, well, they'll talk about that, right? We're all human. We like to talk about these things. And so they'll talk about that and what it meant to the strategy and how we might have got closer or further away from a place to buy or sell, or kind of violated a place to buy or sell, and all that. Which we'll do that on a weekly basis. So at the beginning of the week, end of the week, and after the month, kind of wrap up what happened in the month as well, to give further confirmation that what we're doing has a tremendous edge over whatever everyone else is doing and what we might have all done on ourselves without the methodology as our tool. I like to always conclude with this. Have a plan, get a plan, build a plan, and when you do, stick to it. Remember that all the money that you've spent to this point, whether it be in education or in trading itself or investing itself, everything that you've done has got you to where you are. So that needs to end up in a plan. And once you have a plan, it's disrespectful to all the time and effort that you put into it to improve your condition. So stay with what you've learned, enhance with what you learn, and then when you learn it, stay with that plan until there's a real good reason for changing it. And hopefully, maybe I'm providing you a reason to potentially change what you're doing, and join us. And you can do that by a free seminar that is tomorrow, August 5th at 10 a.m. Eastern, and also Wednesday for those that can't do Saturdays, August 9th, and then again next Saturday. So a couple of weeks of attempts to get this. You got plenty of opportunity there. Um, I'm actually not sure exactly how long this workshop is. It's not 4 hours or anything. I think it's an hour, but it gets you accustomed to what's going on in uh, how the Pinnacle Method works from a level that I think you'll feel really can tune to you and make you do the things that you might need to do in your financial solutions. All right, so that's it for today. I hope you have a great afternoon and weekend. Hope to see you tomorrow or Wednesday or Saturday at those seminars. Trade safe out there and have a good afternoon.